Right guys, how's it going everyone? In this video I'm gonna be covering what a supply to demand flip and a demand to supply flip is. Essentially I'm gonna be covering what flips are. I'm gonna just define what flips are so that you have a better understanding of what it is when either of our members mention it in the group. So let's talk about the first flip. We have supply to demand flip. Now from the word supply to demand, you'll be able to understand that we're talking about moving from a supply zone to a demand zone. So I'll basically explain briefly what this scenario looks like. So we have this demand zone that forms and price basically continues moving up, and we have an impulsive move that breaks the supply zone. Now when you have a supply zone being broken, that gives you an indication that there isn't enough bearish momentum in the market to respect the supply zone and push down, right? When we don't have enough bearish momentum in the market, what happens is price breaks through the zone and it pushes down to the next demand zone, or in this case we call the cause for what broke this supply zone, right? The cause for that break is basically the last sell candle here, which is a demand zone that caused the break, and price usually returns to it and mitigates this point and pushes up. This is what we call a supply to demand flip, right? So this one's supply to demand, where you have a supply zone broken, mitigates the candle that caused the break of that zone. So this is a mitigation of the demand zone. Now if we look at demand to supply, from the word demand to supply we move from demand to supply. This case will be where we have a supply zone forming here, we mitigate it, we continue pushing down, and we have an impulsive move that breaks this demand zone. Now when a demand zone is broken, same thing as supply, that tells us that there isn't enough bullish momentum in the market to hold the demand zone and mitigate it and push up. Now when that happens, we look for the same thing, we look for the cause that basically broke that demand zone. And once we have identified that cause, or the last buy candle in this case, then we can mark it as a supply zone and we can look for a mitigation of that point. Now this is what flips are, right? When you have zones failing, you look for the opposite bias of the market and take a trade off of that. This isn't a strategy on its own, it is a concept that is being used in our course, right, and in our entries. So do not trade this alone, right? If you want to test and see how it works, how it looks like in the markets, go ahead, but do not trade this alone, because you need to have additional confirmations and confluences, which is why I have included a entry PDF, a criteria list of what I look at in the markets, right? So this is what supply to demand and demand to supply flips are. Now this is something very important in our entries, because we want to see a zone failing before we take our entry, because that is a great indication that price is going to be moving towards our desired bias in the market, right? If we're looking for shorts, we want to see a demand zone fail. If we're looking for longs, we want to see a supply zone fail. So when you have these sort of criteria met, it gives you more confidence in terms of where the market is going to be moving.